How you doing, everybody? Welcome back to my YouTube channel. Today is gonna be a special video. We're on August the 22nd, everybody. What a beautiful Saturday. Look, as you know, I love Robinhood and I'm pumping iron. I'm really doing well. Let me just show you. I'm already at the 5,000 mark. I know some of you have been watching my videos, so I appreciate all your kudos, support. But guess what? I mentioned this a couple videos ago about Roth IRA, and on this video it's gonna be all about my Roth IRA experience on Fidelity. I'm gonna tell you, if you're an absolute beginner, this is a video for you. I'll tell you exactly what positions I'm moving on my Roth IRA, how my mentality is, how my strategy is. I'm 26 years old, so I think that matters when you're thinking about retirement. Your age is a vital component of your retirement plan. So ask that question yourself. With no more than ado, let's start with this video. So I want to give the credit to this YouTube channel, Investing with Rose. It is because of her that I have my my Fidelity Roth IRA set up. Because of her videos, I was able to do mine. So I want to give credit to whom credit is due, of course. Now, what is a Roth IRA, everybody? Roth IRA offers tax-free withdrawals. Let me read to you from Vanguard.com. What is a Roth IRA? A Roth IRA is an individual retirement account that offers free, tax-free growth and tax-free withdrawals in retirement. That is one of the reasons why Roth IRA has become very popular. Roth IRA rules dictate that as long as you own your account for 5 years and you're age 59 and a half or older, you can withdraw your money when you want to and you won't owe any federal taxes. So bottom line, you're coming at the age of 60 years old and you've been using your Roth IRA for more than 5 years. Welcome to retirement paradise, because now you'll be able to use as much money as you have putting in your IRA, and welcome to that Disneyland. All right. Now, my plan is, of course, to, God willing, get to that point of a 60 or plus, so I finally have a nice investing portfolio, a nice investing strategy, and I can enjoy that with my family. So how can you do the same? Well, I'm gonna give you the knowledge I know so you can start taking that little pieces and get to paradise with me. Now, if you have already selected your account, like your platform, in my case it's Fidelity, and I already say why I chose Fidelity, you're gonna just click on open an account, and you're gonna select whether you want a rollover IRA, Roth IRA, traditional IRA, etc. The difference I know about a traditional IRA, or like 401k, let's say a 401k and a Roth IRA, well, 401k is linked to your employer, and a Roth and a traditional 401k, it is an retirement account that you can actually put in like more than $15,000 per year. It's insane, right? But you get taxed differently. We're not talking about 401k on this video. It's all about Roth IRA. So I'm assuming you're gonna click here, and then you're gonna start answering some basic questions, and then you're gonna click next, and you're gonna answer all of this. And of course I cannot do this because I do have to provide my information, but what I can tell you is it's very easy, and do that. If you have any questions, of course, let me know, but at the end you will have to select one of two choices for your retirement strategy. Select whichever you want. You can later change it, and I'm gonna show you actually, if I remember, later in the video. But just complete your IRA. All your information is basic information. You will have to then link your bank, your savings or checking account, so you can start pulling money from your bank to Fidelity. And I mean, if you have a portfolio on Robinhood, you already know how the deal works. So let's do this thing. You have a Fidelity account, and for this purpose I have to log in. So I'm going to log in for you. I'm in. First thing that I want to show you, everybody, and actually sorry that you're actually seeing this. Let me just take my bookmarks. So what we're gonna do here is I'm gonna tell you what I typically check on a daily basis. Well, I do check on a daily basis my Fidelity because I'm used to on Robinhood. Like if you're trading, you're checking your Robinhood every single day. But on Fidelity, when it comes to retirement, if you want to check it every week or even every month, if you're not having an active strategy or aggressive strategy, it's fine. But we're gonna talk about all of that. Remember, this video, it may take a couple of minutes. I mean, it's gonna be long, so chill back and relax and let me do the work. So let's go to my portfolio. This time I have a little bit over $1,200 invested, and out of my own money, I have $1,200, which means that I have $30 gain from my retirement account. And I know if you are not used to this user interface or all these graphs, welcome. That was me a couple weeks ago. One of the things about Roth IRAs that I want to emphasize is this. You have a contribution limit every year, and this changes, so you have to be mindful that it may change, and typically it's increasing, so those are good news. This year, 2020, I can only put $6,000 on my Roth IRA, depending even on my income bracket. I'm gonna explain that later on. So I already had $1,200 on my contributions, so I have a couple more thousands of dollars left. Once I meet my 6,000, that's it. I can no longer put money in my Roth IRA. But if you open a 401k with your employer, you can put money there. You have many different instruments to achieve retirement paradise. All right. So that being said, $1,200, and is that a lot of money? Well, for retirement, I don't think so, because one of the reasons why I wanted to open my Roth IRA is because I know a lot of people are very enthusiastic or happy to retire at 60 with more than $1 million. Who doesn't, right? So that's my strategy. If you keep putting $6,000 or more, if they increase the limit on a yearly basis, at the end, I'm gonna tell you, let's go ahead and do the calculator here. As I was explaining, guys, to start, kind of having an idea as far as how much money you're gonna start putting in till the age of retirement, let's go ahead and go to the calculator. It's one of my nice tools that I like to have on hand. Assuming that, I'm right now, if I want to retire at 60, 65, let's do 60 minus your age times, assuming that it's $6,000 per year for your Roth IRA. You're looking at more than 200. In my case, I'm looking at more than $200,000 that I'm going to be putting to my Roth IRA. That number may increase, of course, because the limit tends to increase. But just to give you an idea, if you start having this mentality of retirement and Roth IRA, which helps a lot, of course, you're gonna see big numbers at the end of your years. Now, exactly how does this work? Well, let's go to investment products. Here it's the place where I like to spend most of my time. The reason why is because you really can select across many different tools and instruments to get to the retirement plan that you want, and it's beautiful. One of the things that I like to check a lot is the mutual funds. Mutual funds are a practical, cost-effective way to build a diversified portfolio of stocks, short investments. So mutual funds, based on what I've been learning, it's you're letting a manager with a lot of experience, typically more than 10 years of experience here on Fidelity, do the work on the type of stocks, type of ETFs, etc. that mutual fund holds. But you have to pay a fee, and depends, you select, you want to get into the mutual fund. Typically, the more aggressive mutual funds tend to have a higher fee, and of course vice versa. So explore our fund offering, and you have all these lists that you can select your mutual funds. I'm going to tell you which one I use, of course, but I mean, let's say you are a 20-year-old that you're watching and you want to increase your money the fastest possible with the most aggressive strategy. Well, large growth is your place, right? And the one that's killing it is the blue chip growth fund. There's another one as well, I believe. Oh yes, Fidelity OTC portfolio is one of the highest growths that there are right now on Fidelity, and but they do have a very significant fee attached. What about if you're a 40-year-old person? Well, you may want to be looking at something that is not as aggressive, because you never know how the market is going to react, especially right now in these times. So you might want to do a large blend, or the famous S&P 500 that's in the index. So domestic equity, U.S., international equity sectors, whether you want to do healthcare, you want to do energy, IT, you name it, fixed income, your asset allocation, and so forth. Asset allocation is one of the beauties, because let me just give you this idea. If you are a 25-year-old or 20-year-old and you don't want to know anything about investing, but you want to invest, then target date is the way to go, because you literally can select when you want to retire. All right, everybody. So as I was saying on asset allocation, you can select the date that you want to retire, and it's so incredible. Let's say that I want to retire on 2060 fund. So that's the fund I'm going to be putting all the money. If you don't want to do any work, just check how it works. So Freedom Fund 2035, it's saying that by let's say we start right now in 2020, domestic equity, it's the highest, right? Because you want to start investing in the US, you want to start earning a lot of money right now, while the fund is it's just starting. But once you're approaching that retirement date that you want, check how everything is just starting to change to a more safe position. Bonds and short-term funds really don't change too much. So what's happening is you're changing your equity, your money, to more safer and stable instruments. And that's what it is. So imagine if you want to retire on 2060 or 2065, you will have a longer time in a domestic and international equity funds. But then when it's closer to 2050 or 2060, you will see that money change to safer funds. And that you don't have to change anything. The fund does it for you. How cool is that? Alrighty, so the ones that I like to do right now, and this is my personal favorite, is index funds, because these are mutual funds that they go with the index, with the market, and I like them. They're really good. They're very aggressive, but I like them a lot. And there's two that I enjoy a lot, which is the Fidelity 500 Index, and my all-time favorite, the Fidelity Nasdaq Composite Index Fund. And I'm gonna tell you why. So welcome to this screen. It is a screen that I spend a lot of time here because I like to compare. There are many different things that you can select here: ratios, returns, and details. So I'm gonna go very slow here so you get it. Now, starting from here, one fact that I recommend you to know is to know this acronym. Does help. I think Fidelity could do a better job on having a place so we can copy it faster, because if I try to copy, it's not letting me copy it from here, and there's no place where I see where I can just grab it quickly and just start pasting it, and I'll tell you why. Now, details. The ratings that you see here are important. I preferably want to see 4 stars to 5 stars. Returns, of course, more than average. Expenses low, which means that the people are saying that it's a good fund. The returns are high, above average, and you're spending little. Risk of this category, it's typically in the middle, because it's a fund. We're not talking about a large growth of stock or fund, or even just a stock in general. Good. Now, performance. This is also important. The average annual returns. If you have a 1 year above 15 to 20%. I think that's beautiful. This has 30% because it's following the Nasdaq. So that's really nice. As long as they're all positive, more than 10%, you're good to go. Details. Morningstar category, large growth. So Fidelity Nasdaq is actually large growth, but it is one of the cheapest ones to go in. So I like that a lot. It was funded in 2003. Very good place to start it. Date, the expense ratio, it's 3. I'm going to tell you why more about that. So here you pay $3 per $1,000, which is fine. I mean, if you think about it, I mean, it's nothing, and you're getting a nice quality work by someone with a lot of experience. Somewhere here it says, the tenure of this person. So I like that a lot. Go back to summary. Turnover rate is 15%. A lot of people agree that less than 10 is better, but in this case, I'm fine with 15% as long as the Nasdaq keeps growing. And the NAV, this is the actual price of the fund. So one thing about mutual funds is that you don't need to have 142 to get in. It is not like this. Just you need like the actual price to buy the mutual fund. No, if you have $70, you can buy $70 of this mutual fund and still getting, that's fine. Which means that as long as you have $1, you can still get a piece of this fund. Got it? Makes sense. So now let's go to my place. Oh, I forgot to tell you one thing that's extremely highly important, which is what the fund is all about. So the reason why it's really good and I love it is because it has more than 45% of its portfolio in the technology industry, and you can see the companies that occupy that place. So it's all about Google, Amazon, Microsoft, Apple, Nvidia, you name it. Just beautiful companies. I do own Nvidia on my Robinhood right here. So I mean, these companies I know, trust companies that are really nice, are growing, and God willing, they'll continue growing for the years to come. On the Nasdaq, this, like I said, my favorite mutual fund for my retirement. If I unclick this, you'll see this is the mutual fund. The Nasdaq, it's just the same thing. It just follows Nasdaq, but large growth. Typically, it's another mutual fund here on Fidelity. We're seeing that the one that I have, it's there is more hypothetical growth on that one. Now, that being said, everyone, there's a lot of information I know, but it's been taking me a while and I'm still learning. But I just want to, share it with you. You got to compare. Here is where you really see how everything is working. Now, reason why I was telling you before that I would like to have this as a quick copy and paste, because I have to kind of remember what the symbol is. So if I want this, the Fidelity 500, I just have to remember which is FXAIX at. So now you can see easily which one gives you more hypothetical returns with $10,000 from 2020 or 2010 all the way to 2020. And we see that it's Nasdaq that's giving you more returns. Let's add S&P 500. S&P 500 is here. Let's add the bonds. So the bonds, like you can tell once you get into retirement, close to retirement, it's good to change your strategy to bonds. So man, if you're 59 years old, why are you still in the market? Just calm down so you secure that money. Bonds, they're just gonna practically never change of its price, and you will have steady growth, and your funds are gonna be safe. You have the Russell 2000 and this one as well, non-stock. So out of all, which one is higher? The one Fidelity Nasdaq Composite Index. Look at this. So in this case, Fidelity 500 Index, I do have money on this one as well, because what I'm trying to do is, of course, don't have everything on my large growth strategy. I do want a large blend, so if anything happens, it's a little bit more secure. I have $1,200 out of $6,000. I think it will be a good idea to have $4,000 on Fidelity Nasdaq and $2,000 on Fidelity 500. That to me gives me growth over time. All right. That to me is great. But you see NASDAQ, it's really high here. Like hypothetically speaking, by the time of 2020, you're looking, let me see. Oh, there you go. So 2020, right? You're looking at a $52,000 hypothetical growth starting at $10,000. You see? So in 10 years, you'll be making like $40,000. Not bad. Remember, this is retirement, of course. There are better ways to make more money, but this is retirement now. And of course, you can only start putting on your Roth IRA $6,000 per year. So it's not like you can just drop $100,000. Okay, good job. So I'm gonna show you one thing. This is a bonus because I was trying to see. I honestly wanted to see if there was a stock with high returns than the NASDAQ. Because to me, it is a beautiful mutual fund. You don't really pay anything for the expenses, that you're getting great returns. So is there anything else? Well, there is. So I'm gonna go to domestic equity. Remember I told you about the large growth? Let's go to, I know it's OTC. Let's go to OTC. I'm gonna copy this. I'm gonna go to my compare. I'm gonna drop it here. So look at this. Boom. What do you think about that? What do you think about that? So my Fidelity OTC, it's a large growth. Overall, it's even higher than NASDAQ. Returns, there's above average, but look at this. Expense, average. You see that's the what you have to pay, the catch. But there's some people who like that, and of course, if you are into that, by all means. And the reason why Fidelity OTC portfolio there are high returns is it's this. There's 49% of the technology industry invested, whereas on my, let me go, gets a little confusing. On my NASDAQ, I have 45. Okay, 49 on my large growth, 45 on my NASDAQ. And out of these two, I do prefer NASDAQ because you have my expense ratio at 3%. OTC is 89.89%. You see that? It's more expensive, and it's high, and it's of course more volatile. So watch out with that. So there's more. Large growth. Let's go to blue chip growth fund. So all these large growth, their only purpose is to make you money. There you go. You see, it's even higher, another higher than the index, than the NASDAQ index. I'm gonna take out the these two, the Russell, so we see better. So this light blue, that's a Fidelity 500, which is the same as the S&P 500. You see that? So that's the S&P 500, the one that I'm also investing, but I want some growth, so that's the reason of my NASDAQ. And you can go ahead and check all the products they have. They have so many. That's one thing that I get overwhelmed. Look at how many they have for any person, any type of strategy, you name it. So like I was saying, if you just want to do asset allocation and say, gosh, I'm 31, I want to retire maybe to 2070. Well, you have about 30 more years to go, so just find the Fidelity Freedom 2070, and then you start just putting money on that mutual fund, and you're just gonna see how it's gonna start going up, and then by the time you are reaching the 2070 year mark, it's gonna change to bonds. What a beauty, right guys? What a beauty. So that's what I wanted to tell you about Fidelity. This is what I've been doing for a while. I'm still learning. I'm still growing. I'm happy that my Roth IRA is increasing, of course, based on my decision making that I've been doing. But guys, thank you so much for watching. If you got all the way to this time of the video, go ahead and please like and subscribe. That really helps the channel. And I see you in the next one, everybody. Peace.